2026 was marked by a combination of resilient economic data, geopolitical developments, and continued optimism surrounding artificial intelligence and technology investments. Global equity markets generally advanced during the month, although investors remained cautious about inflation, central bank policies, and ongoing geopolitical risks. In the United States, major stock indexes, including the S&P 500 and Nasdaq, traded near record highs for much of the month. Strong corporate earnings, particularly from technology and AI-related companies, helped support investor confidence. Markets closely monitored inflation data, employment reports, and comments from Federal Reserve officials regarding the future path of interest rates. While inflation continued to moderate, it remained above the Fed's long-term target, leading policymakers to emphasize a data-dependent approach before making additional rate decisions. The Federal Reserve kept monetary policy restrictive throughout June, signaling that progress on inflation was encouraging but not yet sufficient to declare victory. Investors adjusted expectations for future rate cuts based on each new economic report, causing periods of volatility in Treasury yields and the US dollar. In Europe, markets benefited from easing inflation pressures and improving investor sentiment. Attention remained focused on economic growth, manufacturing activity, and energy prices. European equities generally performed well, although concerns persisted regarding slower industrial production and weak consumer demand in several countries. Asian markets showed mixed performance. Japanese equities remained among the strongest globally, supported by continued investment in semiconductor, robotics, and artificial intelligence industries. The Japanese yen remained relatively weak against the US dollar, benefiting exporters but increasing import costs. Chinese markets faced ongoing challenges related to the property sector, domestic consumption, and slower-than-expected economic recovery, prompting continued expectations for government stimulus measures. The commodities market experienced significant swings throughout June. Oil prices were heavily influenced by geopolitical developments in the Middle East, particularly negotiations involving the United States and Iran. Periods of optimism surrounding diplomatic progress reduced fears of supply disruptions, while any escalation in regional tensions quickly supported crude oil prices. Gold remained sensitive to movements in U.S. Treasury yields and Federal Reserve expectations, fluctuating as investors balanced inflation concerns against changing interest rate outlooks. The foreign exchange market was dominated by movements in the U.S. dollar. The dollar strengthened when stronger economic data suggested higher interest rates could remain in place longer, while weaker inflation reports temporarily pressured the currency. The euro traded within a relatively stable range, and the Japanese yen remained under pressure due to the significant interest rate differential between Japan and the United States. Geopolitically, investors closely monitored developments involving the United States, Iran, the Middle East, and international trade relations. Diplomatic efforts helped reduce immediate concerns over energy supply disruptions, although uncertainty remained an important market risk throughout the month. Trade discussions among major economies also continued to influence market sentiment. Artificial intelligence remained one of the strongest investment themes worldwide. Technology companies involved in semiconductors, cloud computing, cybersecurity, and AI infrastructure continued attracting substantial investor interest, helping lift major equity indexes despite broader economic uncertainties. Overall, June 2026 demonstrated that global financial markets remain supported by resilient economic growth, improving corporate earnings, and continued technological innovation. However, investors continue to watch inflation, central bank policy, geopolitical developments, and global economic growth closely, as these factors are expected to remain the primary drivers of market performance during the second half of 2026.